Tanvir, it's a tale of two narratives. On the resumption of work side, Asia is clearly ahead of the rest of the world, particularly China, but elsewhere as well. The subways are full, the traffic congestion has picked up, locals are going back to work. But that's one side of the narrative. The second side of the narrative is that confidence, whether it is consumers or investors, that isn't entirely back because they are looking at headlines from all over the world and resurgence of virus, whether it's in Australia or the US or elsewhere, and the China US skirmishes, all those things are weighing down on expectation. So the physical reality is a little more constructive in Asia than the rest of the world. Yesterday's GDP data from China adds to the recent flow of information out of China, which is that in terms of retail sales, in terms of people being allowed to go back to work, in terms of easing of lockdown, it's all check, check, check. But as far as the longevity of the rebound in demand, about the likelihood of the economic recovery being sustained on both domestic and external demand, that is still a very big question mark.
What does this mean in terms of additional policy response from the Chinese authorities?
So I don't think in any stretch of imagination that the authorities are about to scale back on some of the liquidity easing measures that they put in place. I don't think there's no sense that we are close to normalcy, and the extraordinary measures put in place earlier this year, which by all accounts in China's case was much more modest than the rest of the world, will be withdrawn. So I don't think that's on the cards. What is on the cards, however, is to ensure that the property market, the equity markets, they don't go out of control or become excessively volatile. And it's not just a cue from domestic economic news. It's also the external issues, particularly with respect to dollar funding for Chinese companies and access to markets for Chinese companies. All those issues are certainly going to weigh in. And I think policy environment in China would be calibrated toward creating some sort of a shield over companies on that issue. As far as the rest of Asia is concerned, it's a question of how much can you spend going forward. If you are in India or in Indonesia, already the markets are raising their eyebrows about the very large deficits that are going to be incurred this year. And the authorities' challenge now is to convince the markets that it's not the quantity, but the quality of the stimulus that matters. And I think that's going to be the main issue going forward, that the extra money that is being printed to take care of livelihoods, would it help reduce credit risk on a tangible basis? Would it bring consumers back to the purchasing table on a sustainable basis?